Good day, traders, and what is going to be an absolutely pivotal week this week, whether you're looking at political events, whether it's to do with Brexit or the midterms on Wednesday, or whether you're looking at the overall relationship between the US and China, which I think is the game changer out there. Whether you're looking at more central bank specific issues where central banks have a continued chance to mark to market everything they've been seeing from financial conditions and assess their outlook for policy. And obviously that's going to be even more heightened on Friday with the RBA statement on monetary policy, especially given what we've been seeing from the housing market and you know, what is it going to be the trigger point for them to act if there is a trigger point at the moment. Of course, the RBA in Australia still have a view that the rates are more likely to go up than to go down, and that's obviously a big issue considering of what's been happening in these auction clearance rates, and the demand for credit to get these expensive houses will probably be dropping at the moment. Of course, we are looking at individual data points. In the US, for example, we've got the ISM service numbers. In the back end of the week, we've got inflation numbers out of China. Or whether you're looking at stock-specific issues, we've still got a handful of companies in the US still to report. Buybacks are going to start ramping up now, which is going to be a natural volatility suppressor. And here in Australia, we've seen Westpac coming out with some earnings, which are okay. Their cash earnings are pretty much in line with expectations, fairly soft. Pre-provisioning operating profits down 1%, but the asset quality is in fairly good condition. Their capitalisation ratios are fine. The levels of interest-only mortgages on their books at the moment are below APRA targets, and they're very much in a fairly comfortable position to take on the challenges that the Australian economy will throw them going forward. But certainly I think politics is really going to be the dominant theme this week for markets. As I say, we continue to look at the dialogue between President Xi and Donald Trump and how that plays into the perception of a potential deal as we go into that G20 meeting in mid-November in Buenos Aires. But I think for me, more closer to home is really what's happening in Brexit. You know, there's been a lot of headlines that are playing through. It's been very difficult to trade the pound recently because you know, the market's structurally short, but there's been contending with headlines playing through. But it does look like a deal is more likely than not at this stage. There has been an article in the UK Times that suggests that we are going to see the UK being offered a concession from the European Union that they're going to be part of the customs union for an undisclosed period of time. That alleviates any kind of hard border between Ireland, and any kind of goods and services checking and any regulatory checking will take place within Ireland and not at the border. And certainly the market likes that situation, although I will say that if you look at some of the headlines at the moment, Dominic Raab is being talked about leaving the backstop within 3 months, which probably is going to be a point of contention as well. And of course, when a deal is produced, if a deal is produced, then we still need to get this through the House of Commons, and there's still, that's the Guardian are reporting that that's probably about a 50-50 outcome at best. So Sterling this morning on the back of this secret deal headline has moved up into sort of 130.60. Traders have sold into that, and we're still up on the day, but it's certainly come well off the highs on the early part of the session. I still think we want to have a look at what's happening in the US with the FOMC later in the week. I think the ability for them to change that statement, we'll find we've seen a bit of a tightening of financial conditions, but I don't expect to see any kind of material change. And if you look at interest rate pricing, a lot of that has been driven by the goodwill towards the US and China of late. And of course, a lot of that has been down to what happened on the non-farm payrolls numbers on Friday, which of course were very, very strong relative to expectations. For me, the big highlight of the week, though, will be the midterm elections. That could be a big volatility event. It may not be. If we look at what market pricing has suggested, and I've talked about this in previous videos, everyone expects to see in terms of market pricing, expects to see a split Congress, the Democrats taking the House and the Republicans taking the Senate. And of course, that could be a modest US dollar negative. But that said, as the polls open at 9 o'clock Eastern Daylight Time, and we'll finish at the last polls close at 4 o'clock, by about 11 o'clock, we probably should have at least 50 to 60% of the very competitive states producing their polls, and then we start seeing the exit polls. So I think probably by about 1 or 2 o'clock in the afternoon, the markets could become alive. And certainly if we get a sense that the Republican Party get a clean sweep and control both chambers of Congress, then you are going to see the US dollar absolutely rally. I think you're going to see US futures and Treasury futures move progressively higher as well. And I think that's going to be something that we'll look at very, very closely. So as we go into Wednesday, I think that's very much it as well. So this week has everything for whether you're looking at politics. We've seen developments taking place in all facets of those markets. Whether you're looking at economic data points and how that changes the perception of interest rate prices, there really is something for everyone coming forward. But for me, the backdrop continues to be focusing on the US and China relationship, but we do have other points which we need to look at this week as well.